Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, the 24th of November, 2020. We've got big news today. The Dow Jones Industrial Average crossed 30,000 for the first time in history. We'll see if it closes above that as I film this today, but thanks for watching, and let's go through some historical performance of the Dow Jones. Here we are. The Dow is above 30,000, and who would have ever predicted, especially since we got hit with a global pandemic earlier this year. Keep in mind, if we go back to February, the Dow was knocking on the door. It was 29,000 and some change, just under 30,000, well on its way to eclipsing that number. But then again, in March, we get hit by the coronavirus, as did the world. Things change. If you keep in mind, middle of March, the Dow actually traded down to around the 18,000 number. So what a stretch and what a lot of traction we've covered between point A and point B. That being said, let's look at the historical performance of the Dow Jones Industrial Average. As today is the day where we actually hit. We'll see if we close above the 30,000 number. Either way, it's historically very important that we hit this number today. Going back to January 25th of 2017, we had Dow 20,000, right? So not that much time, 3 years or so, for us to go from 20,000 to 30,000. That's pretty impressive. If we go back to November 22nd of 2016, it's election time, if you will, we had some certainty. Market was the Dow was at 19,000, just above that, and that's when they closed above that number. December 23rd, 2014, 18,000. And then so on and so forth, going back to 2013, 16,000 for the Dow. But let me take you back just about a little bit more than 20 years or so, about 25 years. The Dow Jones Industrial Average, okay, in 1995, this is important, so let's remember this. 1995 was 5,000, closed above 5,000 for the first time in 1995. And then obviously we had in 1999, Dow 10,000. But look at this, from 95 to 99, if you remember, by the Dow, S&P, even the NASDAQ, the market went on a tear, super crazy. Why was that? Well, I'm not saying that this is setting up to be that period in time. Now, keep in mind, we also had an internet bubble back then as well. So markets were looking in the future, getting overly ambitious and excited, and price to earning multiples were well out of sort of even reasonable valuations. Today is different. That being said, we were looking at the political environment back then. Remember, President Clinton was now in his second term. And Newt Gingrich, Speaker of the House, GOP leader, we had divided Congress back then. So as soon as we got divided Congress, which we could have a setup much the same right now. So the Georgia races in early January with the 2 Senate seats that have a rerun, we have to see how this shakes out. If the GOP controls the Senate, we will then have the House in the Democrats' hands and the Senate is retained in the Republicans' hands. That's divided Congress. But again, a Democrat in the White House. When we had that last time, keep in mind, we also had a Treasury Secretary as well as a Federal Reserve Chairman, Alan Greenspan. Alan Greenspan is much like Janet Yellen. Now, Biden-elect, presidential-elect Joe Biden was just announcing Janet Yellen, who was a Treasury Secretary and now is going to be in charge she's going to be the Treasury Secretary. She was a former Federal Reserve Chairman. What markets like about her and why we saw a rally most recently is because, one, she knows where all the keys are and all the doors are as it relates to the monetary policy as well as fiscal policy. So there's experience and certainty as it relates to Wall Street having sort of a team of successors come in that actually know their way around. So there's not a learning curve in the event that we have a double dip recession or anything that may come our way in the foreseeable future when it comes to economic crisis, if you will. So that's confidence and comfort and certainty for the markets, and then pushing above the 30,000 level. But going back to Alan Greenspan back in the late 90s, a very pro-growth policy from the Federal Reserve. Janet Yellen had that when she was Federal Reserve Chairman, but now she is going to be in a different capacity. That being said, she's very pro-growth. low interest rate environment. Markets are going to see through this and take advantage of it. Again, that's the Fed playbook. When that happens, you're going to want to own real hard assets. You're going to want to own stocks. You're going to want to own real estate. You're going to want to own precious metals, even art, if you will. All of this is going to appreciate to stay ahead of inflation. And then we got divided Congress. Hopefully we saw that play out and the market doubled, literally doubled from 95 to 1999. So we don't always say this, but history doesn't always repeat itself, but it certainly rhymes. So there's no prediction here. But that being said, you're seeing that regardless of, let's say, administration, you want to find out who the financial and fiscal adults are in the room, at least the market does. And right now it's liking what it sees. So that's our update. Congratulations on Dow 30,000 today, all-time high. Let's see if we close there. That'll be pretty historic, but more importantly, we've got a lot of trends that are our friend as it relates to both in the short term and long term, economically speaking. So that's our update for today. Thanks for watching, like, and subscribe, and then we'll see you again next time. Take care.